Hi everybody, how's everyone doing today? Welcome to CryptoEMC. Today we're going to be looking at one scary signal. We don't want to BS around the subject. I think it's something that we're going to have to be responsible with and have a look at. Look at the options of what this means for our investments. We're going to be diving in some large time frame analysis, showing the big picture and where we need to start protecting some gains should the market then decide to go lower. With me is my trading buddy Fibonacci Lee. How are you doing, buddy?
Exactly. Hi everyone. So today really you are now really in the house of two-tier specialists with no bullshit opinions. It's not the best way to start the month of December, but you know the monthly candle close from yesterday forced us to look at some bearish signals. And yeah, I mean it's not with the it may happen, it may not happen, but at least we feel like we should be responsible, and we have we have to bring you guys these kind of signals and let you now make a decision of on what to do and how to interpret those signals. Like I said, we are not here to bullshit. We are not here to shout BTC is gonna go to 100 or 200,000 every 15 minutes. And yes, I do believe that we will go to 100 and 200K, but no, maybe just not now. But we are still on a long-term bullish on BTC, obviously. Otherwise, we won't be here. But yeah, in order for BTC to go to 100K, there's a lot of ways to do it. And by the way, nice mic, Udo.
It's coming there. I hope the sound is better, guys. Throw me in the chat. We literally set this thing up in the few minutes before the show, so there might still be a lot of tweaks. But while you guys are writing comments on the mic, please smash the likes and the subscribes. Production quality is coming up every day. And thanks for joining in, although it might not be the most clickbaity bullish style that we've put out there. So yes, let's get cracking. Lee, when we look at the monthly candle close, buddy, it's something that we seldom do because it really moves slow. There's a lot of time that needs to come in. But when we look at these candles and we look at what this means for us, it's a nice way to just make sure that the market is still healthy. So we've looked at trades and we looked at them on small time frames, and these small time frames can give us clues on when to enter and get nice shortcut entries into the market with relatively low risk. Then when we move over to the monthly candles, we're going to be looking at where the market is healthy, what we should be doing. And yesterday was a monthly end for us. Now, for those that are not used to this, you know, the monthly end is just as important as the weekly end, and it's just as important as a daily end. We've been saying to you guys every day, you know, it's about the candle close. That's kind of the significant level, because there will be a lot of fighting around support and resistance. Because remember, there's for the exact same amount of buyers in the market, there will be the exact same amount of sellers into the market as well. So the candle close is kind of when everybody fights. For the sellers, for the sustainable dynamic selling traders out there that can keep selling pressure on to force their narrative onto the market, they're going to fight to try and get negative candles to print. And if a candle closes, that's when it locks it in. So the significance of these closing prices are what they're on about, because that's going to continue the momentum for everybody else that should join in on their narrative. Remember, the idea is, if I am a market maker as well, and I want everybody to turn bearish, one wick down and it goes right back up and it continues does not make people bearish. It's staying down, closing a candle there, because then anybody that is bullish is looking at that and saying, right, that's locked in. We have lost that support level. Maybe we need to rethink our strategies. So this is the significance of the closing prices. So both Lee and myself, we spent a few hours before the show talking about what we should be doing, what we should be looking at. And we came to the conclusion that we're not going to try and create talking notes for today. We're going to just explore it. We want you guys to just experience it with us. This is how we go about when we analyze Bitcoin and when we explore the possibilities. And then what we want to do, want you guys to take away, and we will sum it up in the end if it does not make sense. But what we want you guys to take away is just as a step-by-step guide to better prepare your own portfolio. Everybody's got a different starting point than the guy next to him. So everybody's going to have a different goal and a different level where risk is going to be experienced different. Okay, so Lee, buddy, Bitcoin. I'm going to go first today. And let's just have a look at the monthly. So what do I have over here is Bitcoin on the monthly. I'm going to bring my chart open. I'm going to take it to the monthly. And what do we normally see? When we look at any impulse, and whether it's on monthly candles and whether it's on daily candles, a little tool that I always use is the 23/6 tool. So once price starts closing, let's just zoom it in there for you guys. Once price starts closing below the 23/6, and I'm looking at those set of candles, once price closes below that, that's normally when we start going to these golden ratios, the 38.2 and the 618. And now as you track it up, you can see the significance of the 23/6. So that being said, as we track this up, and remember, this is all in relation to closing prices. If I bring this back down, and I make this even bigger for you guys, if I bring this back down, you can see that although it goes below it, it's wicks. It's the closing price that is significant. You can see that we close above it. We don't want to fall below it. So now I'm going to continue the impulse because according to my analysis, the impulse is what is significant here. If we do exactly the same, you can see that we lost it completely. Then what do? We go to the 618. Now in this scenario, although this is a monthly candle, on smaller time frames, there would have been an opportunity to probably get out. And I can remember vaguely we were on another show at that stage, and we were looking at possibilities. And I can remember that I tweeted out for everybody at that stage that 52K is make or break for me due to an analysis. I bought a 23/6 $50,000 Bitcoin, and I wanted to see a higher high. We didn't get it, and that's kind of where we got out based on this simple strategy, guys. So it's not a complicated strategy. Take the low, and we can tweak it right up to the bottom there. Take the low, and you just track this thing up as it goes on. Now, looking at where we're at this stage, you can see that when we correct it to 53, that's kind of the reason.
For people that has maybe just joined us today or even yesterday, what tools are you using?
Okay, we're using the normal retracement tool. Thanks, Lee. All right, guys, for anybody that is new, it's if you go to your trading view and you click on that little arrow that's not visible under normal circumstances. So you hover to the third one at the top, there's a little arrow that pops up. You can go there and you can scroll through. There's loads of tools. The one that we use is the Fib retracement, and you can actually hover. A little star will appear, and you can just click it in so that it reminds you, and your eye can kind of find it quicker in the future. So when we look at, so when I use that tool, I don't have any secret settings or anything like that. This is the default settings that it comes with. All that I do is I've merely changed the colors and highlighted the relevant lines. So normally yours would look something like this, but the values are exactly the same. So all that I've done is I've gone to the settings and I've just asked myself, what do I want to see? I want to see the 23.6, the 38.2, the 50, the 618. I'm not too cared about that one, and I don't care too much about these others, because the idea is that this is my profit tracker. So, and all that I did is once I created the settings, I saved it as a template. So for me, it's just normal fib retracement. And you can see that I also changed the colors so that it just reads a little easier on the screen.
With a 23.6 red, huh?
Yes, because that's my line.
Yeah. Now and, please slap a fib on it. Come on, buddy.
Okay, cool, guys. So let's slap a fib on it. So when we slap a fib on something, what I like to do is, and there's many trains of thought around this level, we can use closing prices, the two closing prices, should you want. And there's good reason to argue that that is more relevant, because that's how we hold support and how we lose resistance and those things. Or we can go and use the extremes. What I found is that strategy is something that works for you and makes money for you. And for me, I'm worried about the closing price, but I know that wicks can come and mess up my game plan. So if I'm too restrictive in my strategy, you need to think of trading, and the movement of trading as organic. Lee, I've explained to you many times how Fibonacci works and where Fibonacci is from, because you fell in love with Fibonacci long after, long before I even told you Fibonacci ratios are in your face, and it's in plants, and it's crazy sequence. It's even in space. So it's a nice...
No. But I know why, and I know where it comes from, but it's just, I mean, when people ask me why does it work, what would be your response to that? Why Fibonacci level works? The simple answer that I have is it just works. I mean, don't worry about why, but it just works. So if majority of people are applying these lines and it works for all of them, then and it's kind of everybody agreed that this tool it's working on TradingView on assets. Yeah, so I don't have like a really scientific explanation of that. Do you have any, Vado?
Well, it works because that's how we built. If you think about emotions and you think about ratio of growth and what is beautiful, anything that is beautiful actually is built to a Fibonacci sequence. So when you study art, the way a form develops has got Fibonacci ratios to it, and then our eye perceives it as beauty. And that is the way that we look at sound. You can have a look. There's even songs written around this, and that's how we look at these things. So it's not unreasonable for us to assume, Lou, if Fibonacci is a measurement of how you look at beauty, I can use Fibonacci ratio as a measurement of how your emotion is going to be in getting you to be fearful, or getting you to be angry, or getting you to be giving up. Wouldn't that be a fair assumption? So, and that's kind of how it works. The hard part is people look at these fib levels, and then when it wicks through, they then start, what's the word I'm looking for? They then dismiss the reality that everything is organic, which means a leaf forms, but it doesn't, nature isn't 100% to the pixel accurate like Lee wants to be. There's always that odd thing. And it's where the saying comes, true beauty does not have an odd angle to it. Think about any beautiful car. Think about any beautiful building. There's one side of it where it always thinks the guy could have done better there. And that's the fact that nature isn't perfect. And the way that I can manipulate Lee's emotions, if I really want to press his buttons, I don't have an exact timestamp where I'm going to get him to flip on me and maybe get angry or so forth. But I've got an estimated idea that if I do this for about 5 minutes long on a Zoom call, I might get the guy to start getting irritated with me. You know, and that's the way life works, and that's the way trading works as well. So just as much as you know how to tease your brother or your sister, so the market knows how to tease you into these horrible emotions. But there's no
Likewise, huh?
guarantee.
Don't forget. Likewise.
No, I know Lee can press my buttons perfectly, but that comes with trading together probably for. I mean, it's now been forever. So back to the point. Now that you've
Back to
got
the
an
chart.
idea of Fibonacci, let's bring this up. I hope everybody's on top of Fibonacci now and understands the implications of it, and not to take it that serious, but know that it's going to be a range. So the way that the chart is printing, if we look at the way the chart is printing, it's emotions. All that we're looking at here is a set of people's emotions. Everybody is disputing the price of Bitcoin. But at this stage, the argument is going into the favor of one party. When it comes down, the narrative flips. The other party is winning. So now looking at this 23.6 and where we're at, once we reach this level, I'll explain now to you guys how I decided to get out at that level. And when we went past it, there was no more point to really take a loss, because the reality is that these levels are going to be areas where people would be interested to get back in. We don't know which one will hold every time, but we do have an idea that, you know, these levels are always going to be significant. And in the scenario where some of these levels do break and lose, that's normally real big warning signs for us. Some crazy signs, scary signs that something is going to be reversing on its trend. So despite the scary tile, Lee, predominantly the market trend is bullish. You agree with me?
Yeah, 100%.
Okay. But now let's have a look at the way we are at this stage. So now we made a higher high. Now you can continue this as one continuation impulse, or the argument can be you can do this and look at this in its entirety. We've lost the 23.6. We went to the 38.2. And if we would want to get out and remedy and cut the losses, the 60 or 59 would be an area where we would need to take action. Now, why the somber bearish note? I'm going to, Lee, do you maybe want to share the divergence, or should I share it?
You can share it. I mean, while you're at the screen.
Okay, cool. So I want to go online.
So for now, the main trend from March to where we are at now, we are still bullish. The trend is your friend until it ends. But it means as well that even the Bitcoin price retraced to 48, 46, we are still within this bullish momentum on this long time frame. So that's why we said it's not like Bitcoin is going. We are not in a bear market. Okay, we're not gonna go to zero. We're not gonna go to 10,000 KBTC, and we still are on track for 100K or 200K. There's no sign of blow off top as of yet, but there is little telltale signs that on the short term we may go into a more longer consolidation phase or a small retrace.
Okay, so with that information, I'm going to bring back the chart, and I want you guys to do this. I need to add to stream. There we go. I want you guys to do this. Just go onto Google and just type in divergence. You don't have to make it complicated. This is one of those scenarios where really good info is actually free. The trick is how to apply this. And for me, this is the schematic.
Open the fifth one, please. The fifth one is it's better.
Which one?
Go back. The fifth one from the top.
Oh, it's the same one.
Yeah, this one.
Okay, cool. So just download this image and save it, because this is the Bible to what. And it clearly states, there you can see what would be seen as reversal divergences and what would be seen as continuation divergences. So what we want to do is, if we are moving in an upwards trend, a bullish trend to the upside, what we're experiencing at this stage, the type of divergence, bearish divergence, we should be looking at for would be a strong bearish divergence, because according to this, a strong bearish divergence can be seen as a reversal of trend. Should we get a hidden bearish divergence, that would be seen as a continuation of the previous predominant trend. So yes, we're still going to retrace, but the reality that we make a lower low would be farther down the line, or maybe less possible. You can't work on a thing that anything or any analysis is guaranteed. So with that being said, let's move over to the chart. So what do we have at the moment? And this is something that I want to just bring to your attention. So I'm going to bring up the divergence for the RSI, and this is a standard RSI, normal RSI. You can go over here and you can literally just type in RSI, anybody that is new, and there it is, relative strength index, and just add it. It's a built-in that comes with TradingView. It's the only indicator that is a leading indicator. Everything else is lagging indicators. And Lee, can you maybe just explain that for anybody that is still new?
Leading indicator, yeah. I mean, for me, also the stochastics RSI is also considered by some traders as a leading indicator. But I think most of the traders, 80% of traders out there, knows or use RSI. And that's why, I mean, this is the only indicator that we truly use between Rudo and I. Yeah, so leading indicator is just preempt. It tells you before the price action, basically, what's going to happen. All the moving averages that you can see, it will only show the level after the candle close. So the RSI is moving with the price at the same time all the time, to make it simple.
Yes. So if you think about it, using a moving average, the best way I can try and compare that is driving your vehicle, but only using the rear view mirrors. You'll still be able to kind of see where you're going to go, because the rear view mirror is going to tell you when you're off the road. But by that stage, you've already gone off the road. And the RSI, being a leading indicator, is projecting forward, telling you what is going to come instead of what has happened. So that's why we don't really use moving averages. It's nice to know and understand them, because knowing what your opponent is using is a brilliant tool to know how to outsmart your opponent. And there's that simple saying out there that states, if you know how to lose, then you know how to win. And every professional trader first learns how to lose and how everybody else is losing before he can start applying a winning strategy. Because that's when the fear, that's where the market turns. That's how we get these entries to the pixel, in a sense, because that's when that loss runs out. That's when we want to enter. Okay, guys, so before we move on, yes, I see there's a little note there from Torben. Please hit the likes and the subscribe.
I'm going to put some sound because it's getting intense here.
Yeah, it's getting very sciencey. So let's bring up lighten the mood. There we go. My bounce sound. Okay, cool.
Okay, so you're going to show us the divergence now.
Yes. So now I want to bring your attention to the RSI, and I want to just bring out the pivots. So these are important pivots. Highs lines up with lows. So what do we have? We've got a higher high in price, got a lower high in RSI. When we look at divergence, what does that show us? Oh, I'm not going to be able to do that. I'm going to have to click on this image. Get it loaded. So what do we get there? When we look at that, and let's just scroll down.
You don't need to scroll down. It's on the top right.
Yes, there we go. Thanks, Lee. What do we get? A very strong bearish divergence is a higher high in price and a lower high in the oscillator. Oscillator is just another word for an RSI or stochastic RSI. So if we look at this now, this is something that needs to take your attention. This needs to have you sit up straight now and say, okay, realistically, what is an euphoric phase in the crypto market? Euphoria is no better term than people are forgetting to take profit. That's what it is. Okay, simple as that. People are forgetting to take profit. So if people are blind, people are saying to you, buy, 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 and we're going up. And large institutions are advertising how they're buying and how they're adding to their position. Ask yourself the question, if everybody's trading against each other, why the hell in the world would people openly say what they're doing? If Lee tells me, and it's just me and him trading in the market, he's going to buy Bitcoin tomorrow and he's got so much money in, what am I going to do? I'm going to sell my Bitcoin for more because I know he wants to buy. We've explained the stop limits to you guys, how that is promises to buy or sell. So advertising what you're doing is the same thing. So keep that in mind. So with this bearish divergence, all that
Or
I'm
maybe I
saying,
just want you to buy it. If you're not my friend, maybe I just want you to buy it from me.
exactly. So that's it. So, and that's where distribution patterns kick in. So with this being said, I think now I've slowed it down and I hope that I've were able to explain it to a point where everybody that's new and the regulars are up onto the same page. And maybe now, Lee, we can speed things up a little bit and have a little bit more fun on looking at the scenarios that this can print out, because divergences, although this one is locked in, doesn't necessarily mean that it's dire stretch just yet. So Lee, over to you, buddy. Bring up your chart and let's maybe have some fun with this.
Okay, let's try. My monthly chart, I mean, same as yours, divergence here with the RSI. We still have, I still have this box here as a support. So like I said, price can still come back to this 48,000 and we will be still trending, because if you put a simple line, maybe from this March low to this low, this is the predominant upper trend.
Maybe go
Trend
to the
line.
weekly, Lee, and then use
Weekly,
that
okay,
as
right.
a...
So if you put a trend line like this here, and then maybe this low around this area, everything that is above this yellow trend line is considering as still as a bullish momentum. Okay, even we can check another trend line from this low to this pivot low, maybe, or even this one. Okay, so it means that Bitcoin can still stock within this consolidation range, still come to this kind of place, and will be still in a bullish momentum. Right, so this is not considering as a bear market. Once, and I think you can put also this 200 moving averages. I don't have on my chart, but they should be sitting around this area, I believe. So anything that is above this 200 MA is considered as a bullish trend. Okay, but doesn't mean that's why when you take that fib level from this low to this high, we are still holding this 23.6 as a bullish momentum. But, and I saw that question in the chat box, that's why I'm coming back to that. If you take only this pivot from the 21st of June, the recent one, to this top, now we've lost this 23.6. And yesterday I asked Rudo, I said, if you bought any Bitcoin at any of this level here, what will be your strategy? What is your take profit strategy, your 23.6? Now, there's one rule that Rudo explained to us when he was on another show. Can you please tell us what is your take profit strategy on that using that fib level?
Well, the idea is, guys, that you don't
What are the conditions?
There's a conditions, and you have to get them right in sequence. I first want to see a new candle open below it and then close below the 23.6. So the candle that opened would be the second to last candle. It opened below the 23.6 and it managed to close below the 23.6. Then
yeah,
any test on the 23.6 can be seen as a second opportunity to reduce your risk, because the probability now is extremely high and favorable that we go back to the 23.6 or the 618 level. So if you look
that's
at
my
where
23.69, and the probability of this candle here coming back as your second chance to exit the market, if you didn't take profit at the top, because taking profit at the top is really difficult. But now the first condition is met, open and close below the 23.6, and we just missed this retest of 23.6 by on FTX by few $100.
And funny enough, Lee, yesterday we were looking at, and I'm going to bring that chart up and then we're going to bring back to your chart. We were looking at this chart over here. Let's switch the logarithmic off and I'm going to go back to the daily. This is the wrong one. This one. We were looking at this scenario yesterday and I explained to you how significant it is if we push up to get a higher high. If we don't get a higher high, what's going to happen? Price is going to come right back down. And we had that midstream, actually, had that little bit of an acceleration. And we went to 59. But now look at the confluence. Multiple scenarios lining up at a specific price point. This level that we didn't get above lines up beautifully with that 23.6 on the large time frame momentum or on the large time frame analysis. So now that's a worrying fact. So on smaller time frame, we are not making the higher highs. That is resistance. And on the larger time frame, that's a level that's supposedly to be held for us to continue on being bullish.
Okay, so let's dive in on a smaller time frame and let's see what we have. 8 hour. If I move that line from this pivot here on RSI. Okay, I don't know if you can see this RSI here at that pivot here. That was the pivot where we had this previous high, and this 59.5. That was the level that we wanted the price to go and make a higher high. All right, and from here we can see that RSI did make a higher high, but not the price. So what this is telling me, if you open that Google sheet again, the RSI sheet, RSI is making a higher high, price is making a lower high. It's hidden bearish divergence, okay, compared to the strong bullish. So what is a hidden bearish divergence on this 8 hour? It means that hence this whole trend from this top.
Just tell me when you're ready, I'll bring it up.
Okay, you can just refresh the memory on that. Hidden bearish. So RSI made a higher high, but the price made a lower high. And this is a continuation of the trend of the move. And you can see on this chart what is the main trend that you can see on this 8 hour chart. From top, we had a trend line. Every time that the price was tried to attack this trend line, failed, never closed above it, failed. So those bull trap or those fake outs, the bulls are trying but never managed to close above that. So this, as a hidden bearish divergence, could be the sign of a continuation for this
of the current trend.
So now, I hope that also answers a little bit of your question on which time frame must I look at RSI and those divergences. So you can look at bigger time frame and then you can dive in on a smaller time frame and what to look for. Okay, so if on 8 hour, this is the hidden bearish divergence and this is the bearish trend that we are following. If I am a bull, and that is really important that you need to understand. If I am bullish on BTC, I'm not gonna go and fight against the bearish guys right here at those levels. These are the resistance area. No matter how loud people is gonna tell me we are going to 100K, I'm not gonna buy anything here because we are in the enemy's territory. You wanna trade when your friends are trading with you, when the bulls are trading with you. And what are the bullish guy or the bulls that they are all waiting for signal is when RSI is gonna retrace back here, and then assuming it's coming back, making a lower low in terms of this pivot here, and price should come with a higher low. Now we could consider, okay, this is maybe hidden bullish divergence for a continuation of this bull run, of this bullish trend, because here, what did we have here? We have a lower low in price, but a higher high in RSI. So this was the signal for the bulls to come in action and to
try.
try to take back the try to take back this fight, because this was their territory. The bulls were fighting here. They are not fighting here. Here they just let it go a little bit. Okay, bears are winning, fine. You can push your price a little bit down for us, no problem. I let you do that. But here, I will have my hidden bullish divergence to tell all my friends, all the bulls, now we can go, we can try to win the battle. So it's always a constant battle of bulls against bears, but you need to find the right time and the right location to take the fight with them. Right? If you are alone fighting a group of 10 people, you're obviously gonna lose. But if they are coming to your territory and you have your 9 friends, you have all your friends fighting with you, then you will probably win that fight.
So Lee, we had a question earlier, and I know that it's like kind of like a white page, black page question. I want a yes or no answer, and I'm just gonna try and see if I can scroll up and get the question. Should we dump bags now or then, sir? And that question kind of came up. And remember, guys, with the chats and with the stream live, there's always a delay. So I don't know exactly. But can you go back to your daily analysis that you did? Because you were drawing your trend lines nicely. And we're showing you that it's not bearish. Don't lose all hope. But I just want to give you perspective so that you can go and apply it to where you bought stuff. Because the same way that we analyze Bitcoin would be the same way that we will analyze any alts that we buy. So I've got my chart ready. I'll bring that up. So when we look at Bitcoin, and we've got it on the daily, and I'm going to flip to the weekly scenario. Let's just use this one, clean and simple. Look at this on the weekly scenario. We've got these lines, these specific trend lines that's in place. Now, for everybody that bought Bitcoin here, where my cursor is now, you've got all the way down to 41,000, and you're still good. Time is in your favor because of where you entered. If you're late to the party and you bought Bitcoin over here, this trend line is not going to help you, because you'll probably end up in an area where you're going to be giving back all your gains or close to all your gains, or even be in drawdown. Depends on how you bought, because very few people bought the bottom of the wick. So your scenario, the reality of where you find yourself in is going to be that you're going to be tracking a trend that is way smaller because of where you entered. But keep that in mind. And that's the same for any alt out there. So guys that bought Cardano at few cents, they are fine. But guys that bought Cardano at $1.50, $1.80 2 months ago, they need to be worried, because their investment is in a situation where it can really go and draw down. And where do they then draw the line on those losses? So I am bullish and I have time. Why? Because I'm in this now for a long period of time now. So my bags, my investments, they've stood the test of time. They were bought long before these reversals. So I can, and I have the luxury to say to myself, I don't need to panic whether Bitcoin goes from 56 to 53 at this stage, or even lower. But for any one of you guys that are new to the party, that's in that area, you've got a complete different scenario. And that's where it becomes in a scenario where you say we don't want to be giving trade advice, because these things can differ for each and every one of you guys. What works for me probably will not work for you. So yeah, so I hope that this was informative and this really helped you guys just put a perspective on this. These are some serious warning signs, guys, that you guys have to do and have to consider. And did I remove my screen now, or was it?
It's fine.
Because I hope everybody tracked it with the specific trend lines. Lee, you tell me if I. Okay, cool. Right, guys.
I was drawn in your wise words, so I was not looking at. I was eating your words, not looking at the screen.
Eating my words. Okay, cool, guys. So we do apologize. Today was very, very hard. Very, I don't want to say boring, because it's not boring doing these things, but it's an eye opener. Anybody that is blind bullish at this stage should just see, hey, There's the reality and the probability. Now, anybody can enter the market and start buying and buying and buying and buying, and it deletes the divergence. We've seen divergence be deleted as well. But there's always an opportunity to buy back should that happen.
But
And we'll be helping you.
It's not you and me that gonna go and delete those divergences. So like the big boys play,
don't have the
like them go and delete those things. You know, don't get in the fight with those. Let them watch. Just watch on the side and see what they're gonna do. If they win the fight, then we can come and we can, you know, and then we can train with them again. But until then, I want them to fight for me, not, you know, not us. No.
What we like to do is, guys, I want to position myself with the whale, not against the whale, and then just swim in his wake. Simple as that. Path of least resistance. Right, Lee, pop that tunes. Let's bounce. Thanks, everybody. See you tomorrow, same time, same stream.
So what about my jams, though?
I love that jam, buddy. Tomorrow we'll have those jams loaded in.
Yeah, we still have time, guys. Don't worry, we still have time.